Welcome to the Uncle Dre Show.
Welcome to the Uncle Dre Show. Now, this episode is going to be unlike any of the other ones I've ever done before, simply because this is going to be a little bit alarming, eye-awakening. Just simply put, it's going to be one of those get ready type videos, because this is going to be the biggest financial collapse that we have ever witnessed in history. And men lie, women lie, numbers don't. So this video isn't about me talking about it from theory, me talking about it from like ideas, what I see in the book. It ain't that type of video. This video is a video where I'm going to show you the numbers. I'm going to show you the charts. I'm just going to simply show you how it happened. I'm going to show you where we were financially and where we are now. And we're going to be able to compare in this video and kind of see together, make a conclusion together on what you think is about to happen. Because I got some heavy thoughts on what I think is about to happen based off of these numbers I'm about to show you right here. So let's go back a little bit and start talking about why this even interests me and how I even got into finances to begin with. And it really started in 03 and 05 when I was really entering into high school. So I'm really looking at, I read this letter from Bernanke called Deflation, Don't Let It Happen Here. I remember reading this letter in high school, and it was one of those things where I'm telling people like, yo, y'all see this? Y'all see what's going on? Because I'm seeing what I'm about to show y'all right now. I was seeing this in high school, and I'm like, this ain't looking good. And it's simply based off of the fact that the economy is ran on three-legged stools, right? Because there's three pillars that runs the economy. You have the stock market, then you have the debt market, and then we have the real estate market. These three markets are what makes the economy go around. And in this video, we are going to dissect and talk about each three of those markets and show you why all three are in a hyper bubble and ready to hit the biggest crash we have ever seen. All three of them. There's never been a time in history. This is why I say this is going to be the greatest collapse ever financially, because there has never been a time in history where all three of those stools, those pillars, are about to collapse. All right. So let's start. Before we begin, I want to bring y'all to 2008. Now, that was a real estate market crash that also brought down the stock market, but the bond market was not affected, right? Then we have in the early 2000s, we have the dot-com bubble, and then we have the stock market crash. Real estate nor bond markets were affected. So again, right now, you about to see all three are about to be affected or are affected as with this recording right now. All three are currently affected. We have the real estate market, hyper bubble, stock market, hyper bubble, bond market, debt market, hyper bubble. So let's begin right here with the real estate market. I want to bring up this chart right here, which is the Robert Shiller's real home index. And real just means it's adjusted for inflation. Now, this chart goes all the way back to 1880, and it's adjusted at a factor of 100. So again, it's from 1880 to today. Now, I want y'all to watch how the value of real estate from 1920 to 1940, it was undervalued. Then it was a fair value up until the 1990s, but then it took off until a hyper bubble. And I want to put this in perspective, because in 2008, when that real estate market crashed, we were at 210%. Now, of this recording as of today, we are at 225%. All right, I don't want that to go over your head. That's crazy. So this crash again is going to be real estate market, stock market, and bond market. Hey, real quick, I hope you guys are enjoying this episode. But if you would like a Wealthy Child shirt for yourself, or if you would love to gift it to a friend or family, check out wealthychild.co and get one right now. And also, while you're there, check out one of the many children books on financial literacy, whether taxes, money, life insurance, the history of money, the future of money with cryptocurrency, NFTs, and much more. Also, check out the newest edition of the Money in the Bag. Whole bunch of rhyming poems that'll all teach your kids about money. Check them all out at wealthychild.co today, and let's get back to this episode. I just want to reiterate that. Now, based off this chart, you may wonder why we never bottomed out and reached back to 100, and why we never visited that undervalued territory. Well, the reason being is when the Federal Reserve creates artificially low interest rates, it creates artificial demand. And then the supply tries to meet that demand, and too many houses get built. And as soon as things start to correct, the Fed then has to intervene again. Now, to put this in another perspective, I'm going to show you another chart. This right here is the home price to median household income ratio. So what we see here is that people used to pay 4 times their annual income for a home. So if you're making $100,000 a year, you could then afford a $400,000 home. But then at this real estate bubble, 2005, 2006, and 2007, people were paying 6.5 to 6 3/4. But now people are paying 7 1/3, which makes this the biggest bubble in history. And the correction will be very, very much more painful. So now let's look at the stock market. I got this chart from Mike Maloney's book. It's called Gold and Silver. Make sure y'all check it out. This right here is a chart of the PE ratio of the S&P 500. And PE simply means it's the stock divided by the earnings of that stock. And we used to use a fair value of about 12, which means you used to pay 12 years of earnings per share for each share of stock. So here you see a medium of about 14 from 1880 to the early 90s. Then it starts climbing to a hyper bubble. And you can see the bubble in 1929 was about 32 or 33 multiple. Now we went to a 43 in the early 2000s. Then the stock market crashed. Then we went to a fair value in 2008. But before 2008, when the real estate market crashed, and all of those real estate dividends brought down the world economy, the stock market went back up to a bubble of about 28 on the PE ratio. So there was actually a bubble, but again, the bond markets were not affected. You see, it corrected, but it's kind of alarming because as you can see on this correction, we are right back at 30, which is where we were right before the Great Depression in 1929. Now that's alarming. Now this black arrow is where the implosion of the real estate began to affect the stock market. Now, even if we look at the Buffett indicator, which is just looking at all of the publicly listed companies, and it's really just the number of shares plus the price of shares, which gives you the value of the stock market, then you divide that by the GDP, or the value of 1 year of all of the goods and services produced in the United States of America. So the value of the stock market really has no business being over 100% of the size of the economy. And again, this is only publicly listed companies, so it does not include your local dry cleaners, your local grocery stores, or even your local restaurants. But you can see in 2021, it was over 200%. There has never been a bubble of this magnitude before. And we can see here in 2008 where the real estate market crashed also brought down the stock market. But again, the bond market was not affected. Now here's another revealing chart. This goes back to 1860. And this is the number of hours to the average wage to buy the S&P 500. Now this is basically the number of hours you will have to work to buy just one share of the S&P 500. And you can see it was always an equilibrium of about 22 hours of work that required you to buy one share of the S&P 500. It never exceeded 40 hours or went below 10 hours. And this is from 1860 to the 90s. And from the late 90s, it went into a hyper bubble and it never went back down to the fair value. So just to put this in perspective, we went from 22 hours work needed to now 122 hours work needed. That's crazy. So now we talked about the real estate market and we spoke about the stock market. Let's talk about the bonds and the debt market real quick, because this right here is the U.S. Treasury Bond Price Index, which is basically the inverse of yields. Now I want you to see this bull run from 1980 to now. And I want you to notice that there has never been a bull run that lasted this long. Now this is where we were in 2008 when the real estate market crashed and bonds were not in a hyper bubble, but they were becoming overvalued. Now this is what happened. This is the trigger point. And two words: interest rates. Now we are coming up at 2 years on this interest rate hike. Now let's think about it and put this in perspective. If you're at 10% and you go up half a point, you're now talking about a 5% year over year change. Now we can see here there was a 405% rate increase where this all peaked. Now there's really no way to fix it because we have the rate hikes, but we also have them trying to reduce the balance sheet. So what they're doing is extinguishing the dollar, and it's creating an inflation and deflation at the same time. So just to jog your memory, I want you to remember when these things happen. In April 2007, we have New Century financial bankruptcy. And then it just took 5 months after that for the bank runs at England's Northern Rock Bank. And just after that, 6 months later, there was Bear Stearns collapse. And then 4 months after that, IndyMac and Countrywide financial collapse. And just after that, 2 months later in 2008, Fannie Mae and Freddie Mac nationalized. And then just 1 week after that nationalization, Lehman Brothers had the largest bankruptcy in history. And then one day after that, there was the AIG bailout. 9 days after that, Washington Mutual collapse. 1 month after that, it was the Fez TARP. We'll talk more about that later. And then 1 month after that, there was a Citigroup bailout. Just 1 month after that, General Motors and Chrysler had a bailout, which was $80.7 billion. And then 1 month after that, there was the $20 billion Bank of America bailout. Now, this wasn't that long ago, but I just want to put this in perspective to how things kind of snowball effect very quickly. So now let's look at this chart. We have these things that happened first, which was the IndyMac and Countrywide right here. And then we have the Washington Mutual Bank. So these things happen first, then we have this. But let's look at what's happening now. We already started at this big circle. And let's revisit real estate for a minute, because I didn't mention how severe it is with this commercial real estate collapse that's about to happen. So I didn't put into context how severe it is with this commercial real estate. So we have the government now trying to use office buildings to convert them into residential use, multi-residential use buildings. And it's becoming a problem in several facets. I'm going to talk about a few briefly because I want to just really put this into perspective. Now, for one, interest rates. A lot of these commercial buildings, they locked in at the lower interest rates before. It's about to get higher. So if you're going to refinance, it's going to be very rough for them. Two, converting these converting these offices to apartment buildings is going to be a little bit more trickier than you think, because if you notice, a lot of office buildings, they have that bathroom on that one floor. So you now got to change the whole plumbing of the whole building to make sure there's toilets in every unit, which is very costly. And that cost is not really incentivized by a lot of the townships and the mayors, and the government's really not incentivizing the builders to really do that. And that's going to be an issue also because of the vacancies. Now, I want you to keep in mind that a lot of these leases aren't really up for a lot of these actual businesses that are taking space in these offices. So yeah, you have some offices that are taking the space, but then you also have some offices that are being used. And that's going to be creating an issue. And it's also a price issue. So we have a video on that as well. But I really want y'all to look at the numbers of today, see the charts for yourself so you can understand that, the media may not be talking about what's happening, but it's happening. And by the time the media talks about it, it's going to be too late. Let's not get distracted by the storm that is about to be upon us. But the storm is coming. As you can see based off of these numbers, the storm is evident. And we want to be ahead of it so we're not fearful, because we know what to do. So this is what you do. You want to do your research. You want to focus and understand how money works. If you don't know the history of money, check out my video I did on the difference between money versus currency. First, let's start there. And you want to really go deep into understanding gold and silver and things that actually store value, as well as cryptocurrency. Really understand the blockchain, really understand the new way of money, which is the quantum financial system. If you don't know what I'm talking about, I have done many videos on that. I've also done a video on the CBDC, which is the central banking digital currency. I want you to see how the government is combating with cryptocurrencies. Now, The reason why I'm bringing up cryptocurrency is because, as you can see, we are in one of the most alarming times financially, meaning that this is a time where we have never ever witnessed all three pillars of that stool collapsing right before our eyes. And the reason why I say it's collapsing, because the collapse doesn't just come down. It goes up and then it curves, and then there's no stopping it. So we could just look at what happened before based off the numbers and charts that I showed you, and see what's about to come. It's not rocket science. It's not a theory. It's not an emotional thing. It's just is what it is. This is just how the economy works. The only thing is, we have never witnessed this ever. So I need you to brace yourself, lock in, focus. Do not get distracted by the storm. Um, and as always, this video was not free. The cost that I ask that you pay, that you like, you share, and you subscribe. And you make sure that you tell a friend to tell a friend. And just like that, I'll see y'all on the next one.